take a look at the numbers, we've got revenue growing by 12%, operating expenses growing by 17%. Can you just unpack these numbers for us and take us through what contributed to the 7.3% increase in distributable earnings per combined unit?
Yes, so Samantha, the 7.3% growth in earnings, I think, is within our expectation for the year. The increase in revenue and costs is driven by a number of factors. We've obviously brought new property on stream, Stoneridge, where costs are higher as a ratio to income because the centre is still settling down. But our general property income has increased by 10%. And as a result of interest on our gearing, on the debt that we've borrowed to fund our development drive, that's obviously reduced growth in net income. But overall, 7% after 5 years of 17% growth, still positive and still very good delivery for Hyprop.
Your results indicate that you are doing relatively well, given the fact that the retail sales sector has been doing quite badly in this recession. Take us through, you mentioned Stoneridge, the troubled areas, though, in the retail space.
Look, Stoneridge is a challenge. It's a new centre. It opened in September last year, 50,000 square metres of value centre in Modderfontein. 80% let, so we still have about 10,000 square metres to let, but big focus for management, both to make sure that we get that space let and to make sure that the rest of the tenants, that we get them trading at sustainable levels.
To what extent have retail rental prices been affected by the downturn, and are you looking at ways to renegotiate rental contracts?
Look, I think we have a very good quality portfolio. Comprises Canal Walk in Cape Town, excellent delivery from a super regional shopping centre, great brands like Hyprop and the Mall of Rosebank. So as much as retail nationally, I think to June we've seen 7% decline in national retail sales. We are still growing, only at 1%, which is not optimal. It's also been affected by construction activity at Canal Walk, at Hyde Park, in the precinct around the Mall of Rosebank, where the Gautrainers construction's created a lot of traffic. So our foot traffic is about 5% down, but trading performance is flat, and as a result, we've not seen significant pressure on rentals. I think we've concluded about 20,000 square metres of renewals and new deals in the first 6 months of the year, and on those deals we've achieved between 8 and 9% growth relative to the previous rentals or relative to our budget. So we're comfortable with the continued uplift despite the economy.
Now, there's some confusion as to the relationship with Madison going forward, with their contract expiring at the end of the year and Redefine acquiring Madison. Could you just explain what the relationship will be going forward in 2010?
Yes, from January we have reached in principle agreement with what was Madison and now Redefine to enter into a high-level consultancy agreement with a set fee, and we're obviously looking forward to the ongoing advice, input, strategic guidance and deal-making ability of Redefine.
Lastly, as 1 month into the job as the new CEO of Hyprop, what is your focus for the company going forward?
Look, it's been a hectic month, but I've enjoyed it, and obviously I've got a lot of experience in retail, so I've been able to pick up on the I suppose, challenges and opportunities within the company very quickly. With the current economy, immediate focus has to be on our product, so looking at the tenant mix, looking at our marketing strategies and making sure that our tenants are sustainable within their businesses. Beyond that, the next focus for us is the Mall of Rosebank. We've acquired properties across the road from the Mall of Rosebank, and over the next quarter we'll be looking to put together that precinct redevelopment scheme, intending to start with the extensions to the Mall of Rosebank and the refurbishment of the property within the new year.